Welcome to what feels like the first day of fall. It's nice and chilly out. Actually, I have a sweatshirt on, something we haven't enjoyed in a long time. Yesterday, I was at the park with the dogs and I actually had to have a jacket on. It was nice. Hope you saw the comment. But the big question you have to ask yourself is, can you convert your home sale proceeds into a real estate investment trust without a tax consequence? And the answer is quite possibly maybe. Here's the thing that I've been talking to people about, and this is not advice. This is not legal or tax advice. I do not offer it. I offer ideas so you can talk to experts, which I have at my fingertips, or you can go get it yourself. I don't care, but these are just different ideas. You can go ask your tax consultant or your lawyer these questions and say, can I do this? This guy named Vito told me that this is an idea. Let's say that you have a house that you've been living in for the last 10 years, whatever. How do you convert that into a non-taxable event? You could move out of the house and rent it for 2 years, and that becomes an investment property. So if I moved out of this house today, 2 years from now, I can call the IRS and say, this has been an investment property for 2 years. I now plan on selling it. I'm going to do a 1031 exchange. That's the legal code for allowing you to do a 1031 exchange allows you to take the proceeds from one real estate sale and move it over to another real estate property without tax consequences. It's like a rollover 401k, the pre-tax type of thing with your retirement. That the government wants you to do this because they know that if they double down on that money, eventually they'll get theirs. Again, not tax advice or legal advice. Technically, the IRS code says you can't buy stock securities or any kind of investment other than real estate, which is a like kind investment, unless you do something like this. And it's called an UPREIT, an umbrella partnership real estate investment trust. You need to talk to your tax accountant and your tax lawyer or your real estate lawyer to make sure that this is correct so that you don't get yourself in trouble. Don't just say, hey, I saw this on TikTok and this guy named Vito said this is a great idea, so it's legal. I can't tell you that. I'm telling you that this is the way people are doing it, but you have to use the right people to do it. 1031 exchange people can help you guide the way. Just like I help you guide the sale transaction, negotiation, and marketing. I do all that for the sale of your house. I'm not the expert in everything. I go to the people that are experts. So when you want to do that, use a 1031 exchange to move the money into a REIT. You can do it. Are there pros and cons to a REIT? Yes, there's always pros and cons to everything you do. The pros of a REIT is there's portfolio diversification. So you can put money in the stock market, put money in ETFs and bonds and all sorts of different things, as well as REITs, which you should absolutely invest money into REITs. Vanguard, BlackRock, and other companies have REITs. What's a REIT? It's a real estate investment trust. The purpose of a REIT is to grab money from different people and give you a certain percentage of that trust and allows you to take that money, let's call it $10 million, and put it down on an apartment or a commercial property so the bank can fund the other part. So it's a 20% deposit. The bank will give you 80%, right? Allows you to do that. And with that REIT, you get a certain portion of that back every quarter, every month, depending on how it's set up. It could be every year. You get a big lump sum. It allows you to do this. A REIT is a great vehicle for you to research and get some money into and use. There's also something called a syndication where it's more of a partnership, ownership, and syndication is more like a partnership where sometimes you have voting rights, but you take on more risk, which means you get more money back. So an example is with a REIT, you might get 5% ROI. With a syndication, you might get 15 or 20% every year, cash on cash. So look into it. It's accessible. You might be able to buy fractional shares on it, and you don't have to buy a whole share. You can do that with all sorts of stuff. And it depends on the REIT. And then there's passive income. Again, that's what I was just talking about. And there's liquidity. You can sell into a REIT pretty quickly, just like stocks and bonds, but it's a taxable event. If you pull money out of the stock market, you have to report it to IRS. Long-term, short-term capital gains. It's the same thing with the REIT. Go get tax advice from a tax advice. Competitive returns. Yes, absolutely. You're going to be seeing upwards of 9-10% sometimes in decent REITs. So cons of REITs is, I told you, you're going to pay taxes. It's passive income. You don't get a shareholder comment in it, but you do get it interest rate risk. So if the market bottoms out, like what's happening right now with all the big apartments, you might see that money just disappear. There's a risk in it. It's not very safe. Market volatility. We're seeing a bunch of apartments. I've been telling you for the last couple months, apartments all over the US are starting to go into foreclosure. That means those REITs might disappear. If you use a REIT with an inexperienced person and they oversold you, you could be losing some money. Be very careful. You don't really have control. Remember, I told you with a REIT, you don't have voter rights. With syndication, you do, depending on how they're set up. It's like a mutual fund. You don't have control of that. So you have to let go. It's like a mutual fund, but it's all focused on real estate. And yeah, there are some that charge 2% management fee. There's another group that I'm looking at right now. They charge 5%. It's huge. Mutual funds do the same thing. Bond managers charge the same thing. Financial advisors do the same thing, right? Costs money to make money. Navigating, reinvesting. Do your homework. If you're going to do something like that, talk to your friends, talk to your financial advisor, dig deep into research and figuring out what the best strategy is for you. This is not advice. This is me pointing you in the right direction so you can ask advice to the right people. Yes, it's possible to invest. Voting's coming up. I don't care what side of the aisle you're on. I have friends on both sides, and they both say the same thing about each other. It doesn't matter to me. It doesn't matter who's in office. I'm still doing my job. But register to vote. You have until October 21st to mail in or register online, and you can always do it the day of. If you want information, go sign up for my inspection thing. What is this one? Oh, Bank-Owne of the Week. Guess where this is? East Palo Alto used to be the murder capital of the world. No, it's not. It's actually a little bit safer. Here you go. You get 22 pictures of this house. Look at that. How not to sell a house. Well, this is a bank-owned. This is what it is. And the bottom line is it's worth $884,000. And it just came up on market 7 days ago. It's not my listing. 3-bedroom, 1-bath, 900 square feet. Built in 1944. And whoever did the comps on this probably looked at Palo Alto numbers, because this thing should be sold at about $500,000. Yeah, just the condition it's in. Look at that floor, destroyed, cockroaches. Oh, yeah, Apple House of the Week. Look at this bad boy. This is on Homestead, East Homestead Road. You guys want to spend $2.5 million on a house on a busy street? Well, 3-bedroom, 2-bath. 1,390 square feet, built in 1955. Let's take a look at this gem right here. And you have an amazing view of a spaceship. Yeah, that nice little ranch. I think that's the house right there. Ooh, they prettied it up for you. Put some can lighting, some stainless steel. They went overboard on the staging there. There you go. All for the low price of $2.3 million. And you get the benefit of walking right across the street to work. That's awesome. Congratulations. If you want to become a buyer, think about looking at different homes. Download this buyer checklist. Mountain View Home of the Week, downtown Monterey or downtown Castro Street. Let's take a look at this one right here. Plum Court, right by the freeway, right by the train tracks. A cool $2.2 million. Lord, 4-bedroom, 3-bath, 1,847 square feet, built in 2000. It's on a cul-de-sac, but you also get to hear the freeway noise, the train noise, and the Central Expressway noise. 4-bedroom, 3-bath, 1,840 square feet, just listed today. There we go. Good luck with it. Looks brand new. You know, where I live about a half mile from the standard flight path. So I get to see planes fly through, and you can't hear them. You absolutely can't hear them. But it's not like it flies over your head and shutters your windows. So I'm very cognizant of being close to noisy places. We live about a half a mile away from the train tracks off of Monterey. If you're quiet and you're outside, you can absolutely hear it. You can hear the noise of the horn and everything, but doesn't rattle your house. When you're this close, I even sold a house on the corner of Santa Teresa Boulevard years ago. And my biggest thing was, you're not going to like it. That noise will get to you. So when you're spending $2 million on a house, look how close you are to Moffett, right? So Google guys can fly in and out of there. It will disrupt your sleep patterns. It will disrupt you over time. So it's just something you have to be aware of. Am I saying you absolutely shouldn't? No. Just saying it's something that you have to figure out if you can handle that or not. I personally can't do it. That's why I never bought near a freeway or a flight path or what have you. So there you go. Oh, wait, I'm not done yet. We have to do 40 days on market. We have 196. Everything seems to be going up a little bit, not intensely, but the market's slowing down just a tad bit. I'm seeing that the market's taking a breather, mostly because all the kids are back at school. Everybody's going, oh, election time. What's going to happen if that candidate gets in? Then the world's going to shudder and we'll never have democracy, whatever. Both sides are saying the same thing, straight up. If you watch 500-foot view, it's all the same stuff. So we're seeing a little bit of a breather. Rates are going up a little bit. So things are slowing down. Absolutely. And my real estate Sherpa, Ryan Lundquist, who is an appraiser up in Sacramento, showed me this. And I was like, oh, I'm going to copy it and share it with them. So here's the data for Santa Clara County from 2019 to year to date. Median price for 2019, 5 years ago, was $1.2 million. 5 years forward, 56% higher. I don't understand affordability in this, but it is what it is. It's the same thing with the average price, 50% more, right? Month supply is so much lower, and average days on market is 21. It's actually 17, but this might be for single families. Median days on market is actually 10. So these numbers are all showing that the market's contracting, or the supply is contracting. Demand might be staying still or even going down a little bit, but not enough to affect prices. Prices have gone up exponentially. Is there a crash imminent? Who knows? We can go into World War III. Some people say we're already there. Some people say the economy is going to crash. I don't know. We don't know. Who knows? My bet is I'm buying another house.